posted on my Facebook page. I mean, excuse me, on my on my Facebook page, Family Cash Machine. I'm filming this live on my regular page, but I do want to talk about this FTX. I'm calling it the Grinch that stole Christmas from a lot of people, because there's been a lot of people who have lost a lot of money with this particular scam. Now, it didn't start off a scam. First of all, you guys need to understand, in the cryptocurrency industry, this is all about being your own bank, okay? That's the premise of what this is about. And because so many of us have been trained and brainwashed in school, you know, to think certain opposites of what money really is and opposite of what wealth and creating money and income earning is, we've been taught opposite of what it really is. Robert Kiyosaki covers that great. But I want to say this, that it's an exchange. FTX is an exchange, okay? An exchange in cryptocurrencies, they started to really evolve around maybe say 7, 8 years ago. You started getting these exchanges, these centralized third-party points. And remember, crypto was created to alleviate the third party, okay? So this is not really a reflection on cryptocurrency. It's more of a reflection on the mindset of people that come into cryptocurrency with this mindset of cryptocurrency is kind of like stock exchange. And when you come into this industry with that kind of mindset, you're really entering this industry with a centralized mindset when this is a decentralized industry. So I want you to understand the two differences of decentralization and centralization. So about 7 years ago, we had these exchanges come into effect, because when Bitcoin first started in 2008, I think the first exchange was I can't remember the name exactly, Charlie Shrem's company, and the Walkenvoss twins actually invested in that company because there was a huge problem with purchasing Bitcoin. People didn't know how to get it or how to actually convert cash into Bitcoin. So there was an exchange, somewhat of exchange created to do that. And then really was it like a money exchange to crypto type of medium, okay? That company had some problems from the SEC and had problems when the Silk Road started, okay? When the Silk Road started, there was a dark web and people were buying drugs and prostitution and guns and all kind of things with Bitcoin, which is really what gave Bitcoin its value. I'm going through this whole history, but I think the first exchange was Mt. Gox, which got hacked, and eventually the government had to come in and take over. Exchanges, a lot of them have been a disaster for this industry because it's a middleman, it's a third party, and it's a situation where you don't own your coins. I want you to understand that. When you use an exchange, you do not own your coins. You can retrieve your coins from that exchange, but you don't have your private keys. You have your private keys, but you don't. The exchange has what is called an administration keys, where they can override your keys and take your coins. Basically, if your coins are sitting on an exchange and that exchange goes out of business or gets hacked, you lost your coins. Versus if you have your coins in your personal wallet, you control it, it can't be confiscated, and if you don't give away your private keys to anyone, it can't be hacked. So this is a big difference in the centralized and decentralized world. When you're trusting a trusted third party, that's the problem in this industry. So a lot of people, again, that come into the cryptocurrency industry, they come into this industry with this trader's mindset. And I've seen this over and over again, where multiple people come into this trading and they end up getting wrecked and losing a lot of money because this industry is so volatile. The movements are so sporadic. Any little bit of news could make it move. It's not a big, huge industry. And I'm gonna share with you guys what I mean by that. If you look at the market cap rate right now of cryptocurrency, I'm gonna look at the market cap rate right now and see what the market cap rate is in the entire cryptocurrency industry, over 20,000 cryptocurrencies. Let me show you what the cap rate is on market cap rate. I'm gonna go to my phone right now. The total market cap rate, the total amount of revenue in this industry is not even $1 billion. It's $811 million. It hasn't even hit a billion. It went to a billion, but it's recently dropped. There's been a lot of panic because of this whole FTX thing. Okay, now let me say this again. FTX is an exchange. Everybody in cryptocurrency don't use FTX. I never used FTX. I do use Binance. Binance was one of the largest cryptocurrency exchanges in this industry. They took over. They came by storm. Now, making my point with this $811 billion, million dollars, 811 billion. Let me see this. Is that 811 billion? Yeah, 811. 1 second. $811 billion. It hasn't hit a trillion yet. It went to a trillion and it came back down. Okay, so yeah, so what's going on is, if you just take Facebook, that company by itself is worth $1 trillion. Okay, if you just take Microsoft by itself, we're not even going to go into the Fortune 500 companies. Microsoft by itself just hit $1 trillion recently. So this industry is still baby. Now, what does that mean in economics? Let me share it with you. If you're in a huge aircraft carrier, if you've ever seen an aircraft carrier, how huge and massive those ships are. And when they're out in the ocean, I mean, it's almost like being in a building. It's like a floating building. You really don't feel a lot of the little ripple waves. They have no effect. You're out there just floating. You don't really feel a lot of the currents. Okay. Now, if you're in a little bitty rafter, little small rowboat, you're going to feel every little ripple effect in the water. Even if a little small boat comes by, those waves at that small boat, you're going to feel that. That's the comparison economically in the cryptocurrency industry. It is so small in comparison to Forex, in comparison to all the revenue in the world, all the currencies in the world. It is so small. According in comparison to bonds and hedge funds, it is so tiny. It's so small of a ship. You feel every single current or ripple in the news or economics. You feel it all. That's the difference. That's the difference. Okay, so again, when this small company, well, I'm not gonna say small, was kind of like competing with Binance. When FTX has been going for some years, it had no real problems. But I think in the beginning, Binance bought most of their shares. And when Binance saw, and the guy, they call him CZ, who owns Binance, a Chinese guy, when they saw the competitiveness of FTX, they started dumping their shares massively. And it created some panic. And it forced this particular small company to do some unscrupulous things, and they didn't really have a lot of control of the revenue. So this is what happened. And so when this crashed, it really wasn't like a scam, but this company was forced to crash by Binance. Now, as a result, Binance has lost $5 billion since like the last 4 or 5 days. It took like 2 days. Binance lost $5 trillion. $5 trillion. No, excuse me, $5 billion. Yeah, $5 billion, excuse me, $5 billion in withdrawals because of this huge panic that's going on because of the exchange FTX going out of business. Now, what I want to warn you guys, I use exchanges, but when I use it, it's just to exchange one crypto for another, or certain cryptocurrencies I can't find, I have to buy on an exchange. Once I purchase them, I put them in my personal wallet. I don't keep anything in these exchanges. Okay? I'm just boom, 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 in and out, and that's how I train my team. Basically, you guys, when you want to come into the cryptocurrency industry, you need a group of people that know what they're doing, and we eat, we breathe, we sleep this industry. We understand this mindset. It's a whole different paradigm shift in economics. you can't just jump in this industry just for the money to make the money. It's not what it's about, okay? You will make money by default. And I'm gonna give you an example. This industry is more of a long-term mindset, okay? It's more of a, you need to really widen your scope of Bitcoin. Remember, I started at Bitcoin in 2017. Bitcoin was $250. So Bitcoin shot as high as $60 and came back down. Now it's 16,000. How did I lose? When you look at the long term, okay, 3 years ago, say 3 years ago, Bitcoin was like 9 grand, okay, 9,000. So even at 16,000, how did you lose? So it's more of a long term. Don't look at it like, oh, I had one guy call me and said he lost money with Bitcoin. I said, how did you lose? He said, well, I got in at 17,000. Bitcoin went as high as 20,000, but then it dropped to 9,000 and it stayed there for a year. And I said, okay, well, how did you lose? He said, you didn't understand what I said, Eric. I got in at 17,000 and it started dropping. He said around 12,000 I sold. I said, that's how you lost, because Bitcoin and cryptocurrency, Ethereum, Binance coin, all of these different coins, there is no market like commodities where you don't really own your commodity. I traded commodities. I traded on the Chicago Mercantile Exchange. I traded Swiss francs, Deutschmarks, euros, coffee. So when you're trading, you don't really own those assets. You're leasing them within a particular price range. And if that price range exceeds whatever your projection is, if you're selling, and if it go past your stop loss, you're gonna have to add more money, or you're gonna lose. Okay, or if you are trading commodities and you have a broker and it exceeds the limits that you projected going up or down, you're gonna get a margin call. You're gonna have to add more money, or you lose your money. That's not the case in cryptocurrency. You actually own your asset. So when I asked a guy, how did you lose? How did you lose? How did you lose? He started getting frustrated. And then he finally said, I sold at 12 grand. I said, that's how you lost. You accepted the loss because you came into this with a mindset that this is like stocks, and it's not. All he had to do was hang on for another 6 months. Bitcoin shot up past 20 grand. And then eventually to 60 grand. So it's a more of a long-term store of value. It's not about this jump in, jump out stock market, commodities. It's not trading like that. And most of the people I know that get in with this trader mindset lose. They get wrecked. And that's what happened with Polygon. That's what happened with a lot of different exchanges, because these people that hold their money in these exchanges, they're trading every day. They're buying, selling, buying, selling. So they got that whole Wall Street mindset, but they don't own their coins. The exchange is holding their coins, and if the exchange has an issue, a problem, they lose. So this is how it happened. The media is not going to explain this to you because they just want you to think all crypto is bad, because cryptocurrency is actually an antidote to the economy you see right now, where you got inflation, where it's costing you more and more dollars to do what you used to do, because dollars are being printed and printed and printed and printed. You can't just print Bitcoin. It's only 21 million of them. That's it. You can't just print Bitcoin Cash. It's only 21 million of those. That's it. You can't just print certain cryptocurrencies. You just can't. I think Ethereum is not a deflationary coin. It's an inflationary coin, but most of your coins have a set number, and they can't just be reproduced like that. And so eventually, as those coins get more and more demand and the supply starts to shrink, guess what happens to the value? It goes up. But again, guys, this is a testimony to what I teach. I teach you guys how to control your crypto, how to hold your crypto, not relinquish your power. Because to give an exchange your coins is to relinquish your value. You're giving them possession to control your value. And like I said, a lot of us do it, but when I do it, it's instantaneous. It's like within 5 or 6 minutes, I have my coins back. I'm only using exchanges to exchange coins. And I'm really not liking the centralized exchanges because they're regulated by banks. Most of them ask you for your ID, your social security, which defeats the entire purpose of cryptocurrency to stay anonymous. Okay, so there are some what they call decentralized exchanges where you can go on and actually exchange with other individuals their coin value for your coin value. For instance, if you got $25,000 worth of Tron coin, Tron is only 6 cents or 5 cents, and somebody else got 25,000 of Bitcoin, of course you're going to get less Bitcoin than the Tron, but the value is the same. You got $25,000 worth of Tron, which might be millions of coins, and then you got $25,000 worth of Bitcoin, which might only be 1.5 coins or something, but it's still the same value. You understand what I'm saying? So there's people that exchange value all the time on these decentralized exchanges. You don't need ID. You don't need your social security. You don't have to, go through all the rigmaroles of regulations. So in my vantage point, when the regulations, when the exchanges started, some 8, 9 years ago, 7, 8, 9 years ago, when a lot of these exchanges started to flourish, it was individuals with this business mindset of centralization coming into this industry, not understanding this industry, but capitalizing, but putting individuals in a position to go opposite to what this industry was really set up for. So if you get caught with your hands in a cookie jar, oh, shame on you, because you should understand the difference between centralized and decentralized. And if you don't understand the difference between centralized and decentralized, call me. You guys need to understand the entire foundation and premise of this industry so you can maneuver and make money in this industry without getting your head knocked off. So that's really what it's about. A lot of people got their head knocked off because they don't understand what this is about and how to really use this and navigate in this. So I would advise for you guys, join the Family Cash Machine, contact me. I have personal classes, private classes where I can teach you guys how to move in this industry and make a lot of money. I'm getting ready to post a video. This guy didn't want me to post it for a while. One of the individuals who I work with, he's made over $300,000 since I taught him this industry. I'm talking about he did this within a year. He came into the industry with some money, of course, he might have invested 5, 6 grand, and that turned into $300,000 within a year because I taught him how to maneuver. I didn't tell him what investments to make, but I taught him how to maneuver. I taught him what this was about. And as a result, he was able to really flourish. So with that, you guys, I'm gonna go out and sign out. It's EBcrypto. You guys go to my YouTube channel, follow me, like me on Family Cash Machine, follow the money, go to my Facebook and subscribe for the Facebook and start getting little leaflets of information so you guys can come into this industry safely and not be one of these statistics that the media is using to scare people away from the industry. But in reality, a lot of those people that got taken advantage of did not understand. Do not keep your money on an exchange. You just don't. That's not what it's for. But like I said, it was created as a third party, and the entire industry of cryptocurrency was created to alleviate the trusted third party so you can be your own bank. So when you leaving your funds on an exchange, you're actually moving in opposition to the benefits that this benefits you individually when it comes to money. So with that, I'm gonna sign out again. You guys, EBcrypto. You guys follow the money. I'll see you guys on the next video. Peace.